welcome to another video. Today I want to share a multi-time frame analysis with all of you. So taking a pair, analyzing it from a technical perspective, fundamental perspective, so checking the COT data, what hedge funds and big institutions are doing on that pair, and by using these two different views we will be able to determine how we can be capitalizing on the pair, and most importantly how you can be using the same concepts in your own trading plan and trading strategy. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis daily on all my platforms. So I suggest you subscribe and I will see you in the video. Okay, so there is not only one pair that I want to speak about today. There are actually three very interesting pairs that I want to speak about that can be very good potential capitalizing opportunities in the market. So I suggest that you stick to the video until the end because I will be sharing the full analysis on all these pairs. So let's start from GBPJPY. This is the first interesting pair that I believe you should be following. Now, if you remember from my previous analysis on this pair, which by the way you will find linked in description, so I suggest you also go and check it out. What did I say? I said from this area, okay, so from this previous support here, now turn resistance, we definitely want to see the market make a move back to the downside and go and reach the neckline to complete this W formation. And that is something that you want to see every time that you have a W formation. You want to see the market go and reach the neckline. What we also had on GBPJPY, if you remember from that analysis, if we went and see what we had from a COT perspective, so commitment of traders, what the biggest speculators in the market are doing, so hedge funds, how are they positioned, we could see that currently we were sitting and we are sitting at minus 36k net positions, meaning that they have way more shorts than longs in the market. In fact, they have 63k shorts and 26k longs. So if hedge funds are clearly bearish on a pair, you definitely want to be shorting as well. And that is why we were looking for potential shorts on the GBP, considering that also the JPY was getting bought by hedge funds. In fact, we had 32k, so way more longs than shorts, coming from the way more shorts than long situation that we had in the past. So definitely they were adding a lot of longs, and we have at the moment 61k longs on the GPY, so a lot of long positions. So definitely we wanted to see this move to the downside, and I suggest you go and rewatch that analysis. But what is next? Where is the next potential capitalizing opportunity for GBPJPY? Now, clearly from a weekly perspective, this area here is strong support. Why? Because it's the completion zone of the W formation. So the previous resistance now turned support at this area. And from here, we definitely want to see the market show us a move to the upside. We go down on the daily, and what we can notice on the daily, a rejection has already started. However, this retracement was a little bit too strong. Okay, if you want to see an impulse, the correction should be slower than the impulse, while in this case the correction is more or less the same strength as the impulse. So seeing the market creating a higher high is not something that we will probably see, but there are better things that we can be looking at on GBPJPY as possible developments from this situation. For example, the market from here definitely should try to make a move to the upside. At that point, what happens most of the times if you have a strong retracement is that the continuation to the upside fails. In that case, what the market will create is a daily M formation. If this situation will present itself in the market, then what we will be doing, this weekly structure will be broken to the downside, and we can expect the market to go and retest it, considering the fact that we will also have an M formation. So at that point, what we will be doing with students, we will first be waiting for the market from a 4-hour perspective to shift from bearish to bullish, and then we will be waiting for the market to provide to us one of our valid entries for a nice long situation, nice long position, and then again from this structure that was previous support here, now turn resistance at this area, we will be looking for a nice shorting opportunity for the continuation to the downside and creation of a lower low. Now, if from here the market is already satisfying your rules for a long, you can also be capitalizing on this move to the upside. But for us, it's not satisfying our rules at the moment, so we won't be looking for the rejection from this support, because considering our rules, the market can easily just continue to the downside and break the structure to the downside, because we still have very strong bearish momentum, considering that the retracement is stronger than the impulse. So we need to see more development on GBPJPY, but it's definitely an interesting pair to follow. The market just completed the W formation that we wanted the market to complete. If you have watched my analysis and you capitalized on this move, great job. If not, be looking for this potential failed continuation to the upside, because after this information, if the market will create it, there is a nice longing opportunity and then a nice shorting opportunity to be looking at on this pair. The next pair that I want to speak about is GBP NOK. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Now, what we have at the moment on this pair from a weekly perspective is a perfect M formation. And after an M formation, what do you expect? As we said before, if you have a W, a move to the neckline. If you have an M, again, a move to the neckline. So to the previous support, now turned resistance at this area. So we want to see a bullish wave on this pair. Now, if we go and see what we have from a COT perspective, if you remember, the pound is pretty bearish, right? We already said it. However, we can see some profit taking on these shorts, because the moment in which we had 63k shorts is far back. So if they have such massive shorts, you can expect them to start taking some profits on them, specifically if you have bullish patterns and support zones on most GBP pairs. Therefore, we can expect the market to make the move to the upside, as we expected the market in the short term to make a move to the upside on GBPJPY. Now, with students, we are currently already in the trade. Okay, we're already running risk-free on the trade. It's a very good 1 to 5.6 risk to reward to the upside. So a very good trade to the upside for the completion of the pattern. However, if we go and see what we have from a daily perspective, what we can see it on the daily. After the market created a strong impulse to the upside, we can expect a retracement. Okay, specifically in this move to the downside, there is one candle which is not related to the move, which is this candle here, this green candle here. Now, if the market broke above this area, this is now a strong demand zone for this pair. So if the market will manage to make a retracement back inside of this zone, as it should, then inside of here we will have very strong demand from a daily perspective. On the weekly, we still want to see the market complete the information that we have. Therefore, there is an opportunity to be looking for another longing opportunity. So in the retracement inside of this area, we will be looking to compound our trade with students to the upside. And if you're not in the trade, and if this setup satisfies your rules for entry, then you can be looking as well for a potential longing opportunity inside of this zone. So what we will be doing, as usual, being reactive and not predictive, we will be monitoring with students price action on the 4-hour time frame inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market provides to us one of our valid entries, we will be taking a nice long with a very good risk to reward and probabilities for the move to the upside and completion of the weekly M formation, and obviously the compound of the trade. Now, the next pair that I want to speak about is CADCHF. Now, if you remember, okay, in my previous analysis on CADCHF, what did I say? By the way, guys, I will link that analysis in description as well, so you can go and check it out. What did I say? I said, after this impulse to the downside and this retracement, we definitely want to see the market make the move to the downside. Specifically, the market was exactly here when I spoke about this pair. And what did I say? I said, from here, I definitely want to see the market start the move to the downside. If you ask me, why did you want to see exactly from here the market make the move to the downside? First of all, you find it in that analysis. Second of all, the reason for which is, first, if you want to measure a retracement in the market, where are you supposed to be taking your Fibonacci? From the high to the low of the impulse. Okay, first thing, if you want to measure a retracement, take the Fibonacci from the high to the low of the impulse. And what you will see that in this case, we had a perfect 0.618. So the golden ratio Fibonacci lining up perfectly with the previous structure support, now turned structure resistance at this area, which the market had to reject to the downside. So we wanted to see the move to the downside for the completion of the impulse correction and impulse pattern to the downside, specifically the start of the next impulse rejecting the 0.618 that was lining up with the structure. So on the monthly, everything bearish. If we go and see what we had from a COT perspective on this pair, we check the CAD, we can see that currently we were sitting at minus 33k net positions. So coming from a positive reading, so from having more longs than shorts on the CAD to having way more shorts than longs. So more longs than shorts, more shorts than longs from an institutional perspective on the CAD. So we can definitely expect the CAD to get weak, specifically because we had and we have 52k shorts from in a hedge fund perspective on the CAD and 19k longs. And if we go and see what we have from a CHF point of view, we can see that we are currently sitting at 8.9k, one of the highest readings. So very weak CAD and very strong CHF, coming from the minus 3k with 4k shorts and 13k longs. So very strong CHF, very weak CAD. You can definitely expect CAD CHF to make the move to the downside. Now, from a weekly perspective, what we have, we know that on the weekly we have strong structure here, which is the level that we wanted to see the market go and test. The market not only reached the level, but also broke it to the downside. At least it seems. We still don't know if this weekly candle will actually manage to close below the area. But what we do know is from a daily point of view, we have a situation in which the market has created a nice M formation, up, down, up, down. So nice M formation. After an M formation, what do you expect? You expect the market to give you a retracement to the neckline before the continuation to the downside. So it's pretty clear the way in which we will be approaching this pair with students and how I suggest you approach it as well. Obviously, if you have a clear rule-based strategy that is showing the same things as mine. Now, the way in which we will be approaching this pair is very simple. First, we will be monitoring price action from a 4-hour perspective inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long to the neckline of the M formation. So the previous support now turned resistance for the completion of the pattern. And then again, at that point on the 4-hour, everything will be bullish and we will be monitoring price action on the 4-hour time frame, waiting for the market to provide to us one of our valid entries for the continuation to the downside and creation of a lower low, completion of the impulse correction and impulse pattern to the downside. And obviously inside of this area, we will also have the confluence of the Fibonacci taken from the high to the low of this impulse, a 50% confluence at the moment. So if you capitalize on this move to the downside, great job. I suggest that you take your profits from the move to the downside, because from here we're supposed to see a retracement, as I said also in my analysis yesterday on TradingView. And anyway, my analysis on CADCHF and GBPJPY before the moves happened, before the move actually happened, you find them all linked in description. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. The link is in the description. It's a very complete program. You first learn all the rules of my rule-based strategies and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day. So it's a very complete program. I suggest you go and check it out. The link is in the description and I will see you in.